Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Monday, April 27th, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In this video, we delve into Babylon Foundation's support for Aave, the surge in Bitcoin funds, Ethereum's EEZ proposal, XRP's institutional adoption, quantum computing's impact on Bitcoin security, K-Bank's partnership with Ripple, Bitcoin's price dip, and the role of hot wallets in crypto management. And just as always, a quick disclaimer. This content is for informational and educational purposes only, and should not be considered financial advice. Always do your own research. Now with that out of the way, let's jump right in. The Babylon Foundation has stepped up with a $3 million USDT commitment to Aave's decentralized finance protocol. This move is aimed at stabilizing the market following recent disruptions linked to RSETH. The funds are split, with $2 million going to Aave v3 and $1 million to Aave v4. Babylon's focus is on integrating native Bitcoin into DeFi, reinforcing stability during volatile times. The interest generated from this deposit will be reinvested into Aave incentives, promoting long-term growth and user adoption. This aligns with the broader DeFi United campaign, which has raised $160 million to address bad debt from exploits affecting Aave. Aave's founder, Stani Kulichov, supports these recovery initiatives, emphasizing the importance of coordinated capital deployment over market withdrawal. Next, institutional investors are fueling a surge in crypto funds, with $1.2 billion flowing into digital asset products last week. This marks the fourth consecutive week of gains. The total assets under management across crypto funds have reached $155 billion, the highest since February 1st, 2026. Bitcoin alone attracted $933 million in inflows, pushing its price near $80,000, a significant psychological and technical resistance level. Ethereum funds also saw strong inflows, with $192 million, maintaining a positive streak for the third week. Blockchain equity ETFs have been popular too, with $617 million in inflows over 3 weeks, showing increased interest in indirect crypto exposure. The upcoming earnings reports from major tech companies will be pivotal in determining whether Bitcoin can break above $80,000 or remain range-bound. Moving on to Ethereum's latest initiative. Gnosis and Zisk are developing the Ethereum Economic Zone, EEZ. This model aims to unify liquidity and activity across Ethereum Layer 2 rollups and potentially other blockchains. EEZ enables the atomic execution of smart contracts across Ethereum mainnet and L2 rollups, allowing cross-chain calls within the same block. The proposal seeks to address fragmentation caused by multiple L2 deployments that dilute liquidity. Several networks outside Ethereum's traditional ecosystem have shown interest in joining EEZ, including permissioned and non-EVM blockchains. However, the requirement for reorganization with Ethereum may deter some chains. If successful, EEZ could transform Ethereum into a coordination layer, consolidating liquidity and activity across multiple chains. Now for XRP, analysts predict it will become ubiquitous in financial services, operating behind the scenes much like the internet. The XRP ledger is poised as foundational infrastructure for tokenizing real-world assets such as money, bonds, and real estate. Institutional adoption, rather than retail hype, is expected to drive XRP's long-term success. Ripple has developed extensive payment infrastructure for institutions, focusing on speed, low transaction costs, and cross-border efficiency. Major financial institutions like BlackRock and JP Morgan are exploring tokenization, aligning with XRPL's capabilities. The growth of tokenized finance could make XRP-powered systems essential components of the global financial system. Next, let's discuss the implications of quantum computing on Bitcoin security. Researcher Giancarlo Lelli recently cracked a 15-bit elliptic curve cryptography key using quantum computing tools, earning 1 BTC from Project 11. However, Adam Back, CEO of Blockstream, argues that this does not pose a genuine threat to Bitcoin. Bitcoin's cryptographic keys use 256-bit ECC, making current quantum attacks ineffective. Former Bitcoin core developer Jonas Schnelli likened the experiment to flipping a coin, suggesting it was more statistical guessing than a quantum breakthrough. The consensus among experts is that Bitcoin remains secure against current quantum computing capabilities, with quantum threats more likely to target state secrets or banking systems first. In South Korea, K-Bank has partnered with Ripple to pilot blockchain-based overseas remittance services. This strategic partnership aims to enhance remittance speed, cost efficiency, and transparency using Ripple's global network. The pilot involves testing Ripple's Palisade digital wallet and stablecoin transfers in the UAE and Thailand during 2026. The first phase was a proof of concept, and the second phase integrates Ripple's SaaS wallet, linking customer accounts for transaction stability. Ripple's growing presence in South Korea's financial sector is evident, with over 100 institutions now using its services. This collaboration aligns with Ripple's broader efforts to expand blockchain payment infrastructure in regulated markets. Bitcoin's recent drop below $78,000 has exposed a weak liquidity support zone, highlighting vulnerabilities in the market's price floor. This breach increases downside risk for the broader crypto market and altcoins. Potential impacts include pressure on derivatives funding rates, liquidity on both centralized and decentralized exchanges, and trader positioning. The weak support zone suggests caution, as the market may face further volatility or downward movement if support is not regained. Finally, let's talk about hot wallets, which are leading in secure digital asset management and dApp access. Hot wallets, being software wallets connected to the internet, offer convenience for daily transactions and DeFi interactions. However, they require robust security measures to mitigate hacking risks. The growth of DeFi and Web3 applications has increased the demand for secure, user-friendly hot wallets that support multi-chain access and integration with dApps. Innovations in security and user education are crucial to protect assets in hot wallets amid rising cyber threats. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.